price action trading is the oldest form of technical trading. A lot of these new trading systems got their foundation from price action trading. Okay, by the time you look at, ICT, SMC, all these traders trading support and resistances, and all of these highs and lows, most of them, their foundation is from price action trading. They just took a part of price action trading and coined it into a strategy that they work with. Okay, but price action trading entails the entirety of everything. Okay, so now which now takes us to the question, right? What is this price action trading? It's important to note, right, that price action trading entails the art, okay, it's an art of reading historical and recent chart data and using this historical and recent chart data to predict the future movement of prices. I'll take that again, right? Price action trading is an art that entails reading historical and recent chart data and using this data to predict the future movement of prices. Let me just go ahead and write that out. That price action trading entails the art of reading historical and recent chart data to predict, let's take to the next line, to predict the future movement of prices. Okay, so there are two words here that I'm going to underline, right? Which is what? Historical right here and recent right here. Okay, so this is what it entails in price action trading. So now, what do we mean by the fourth one, which is historical chart data? Okay, and what do we mean by the next one, which is recent chart data? Okay, if you see my analysis, okay, you will see that I start from the monthly time frame. And on the monthly time frame, sometimes you will see me read structures from as far back as 1975 and connect it to what is going on today. When I say I'm reading structures, it's not like I'm going to 1975 to see that this is where I could have bought, this is where I could have sold, stuff like that. But I'm just reading the entire thing as a structure. Okay, so for you to trade price action correctly, you need to be able to have that historical information. It's going to allow you to know that, okay, since 1975, GBP JPY has been bearish, okay, or gold has been bullish since year 2006. The 2003 gold has been bullish. So what does this tell me? This tells me that what? That there's a high probability that gold is continuously going to be bullish. So what is my job? My job is to look for what? Look for a buy opportunity on gold. Okay. Whenever there's a push on gold, I will wait for a rest phase. And on the rest phase, I will join the buy. Whenever there's a push on gold, I'll wait for the rest phase. And on the rest phase, I will join the buy. Okay, so this is how it works. So you have to be able to combine this historical information, right? Know what price has been doing over the years, and now combine it with recent chart data, which is what is prices doing currently, what is price doing on the 15 minutes, what is price doing on the 1 hour, what is price doing on the 4 hours time frame. Okay, you have to be able to combine these data together to be able to accurately predict the future movement of prices. Okay, so that's why when we talk about price action trading, right, we said that okay, with this price action trading, we now use what is known as top-down analysis. Okay, let me go ahead and write that out. So top-down analysis is basically the vehicle, right, that we drive our price action trading with. Okay, so there are some people that do price action trading and don't do top-down analysis. They pick these time frames randomly. They can start from the 1 hour, maybe jump to the 4 hours, jump, you understand? However, we do it in an organized approach, which is what the top-down analysis. That is, we read the markets regressively. We start from the monthly, then we take it to the weekly, then we take it to the daily, we take it to the 4 hours, we take it to the 1 hour, and sometimes even go as low as 15 minutes. But usually the 1 hour is usually my entry time frame. So we use that regressive approach, top down, from the monthly down to the 1 hour for a real-time trade entry opportunity. So that is the concept of top-down analysis. So let me just go ahead and write it out. That top-down analysis entails reading the markets regressively from the monthly time frame, or let me just use from the big time frames down to the small time frames. Okay, so top-down analysis and sorry, this entire thing entails what? Reading prices from what? From the big time frames down to the small time frames. Okay, that is what is entailed when we're talking about top-down analysis. Okay, for example, let's go on to the chart. I'm going to use gold for an example for you. You know. Okay, this is gold, and let's go on to the monthly time frame. Okay, so as a price action trader, right, I'm on the monthly time frame on gold. Okay, and we can see the market from as far back as 1998. All of these structures here are, in fact, they are as far back as 1997. That's where all of these structures here started from. So yes, I'm on the chart, and I can see structures from as far back as 1997. Now, what is my job, right? My job is to do top-down analysis, understand the entire structures of prices on the monthly time frame, then relate it to what is going on the 1 hour to pick a trade. On gold now, without any atom of doubt, right? Gold is bullish. Okay, gold is bullish. Okay, because we can see prices make clear structures of higher highs and higher lows. If you look at this, this is bullish. Okay, and we can see prices make clear structures of higher highs and higher lows. You know, all of these small baby structures here, all of these small structures, you know, higher highs and higher lows, higher highs and higher lows, all these small structures here, all and showing us clear bullish structures. You can see higher highs, higher low. Continue small structure again, higher high, higher low, higher high, higher low. Here again, higher high, higher low, higher high, higher low. You know, and it continues like that to this point. So this means that on gold, what is my job? My job is basically, you know, look for a retracement, because what is important to note, right, that the market moves in waves. After every push, okay, this is a in the case of a bullish structure, right? This is the push and this is the exhaustion. In the case of a bearish structure, this is the push, this is the push, and this is the exhaustion in the case of a bearish structure. So now in the case of a bullish structure, right, this is the push and this is the exhaustion. This is the push and this is the exhaustion. So it's important to note, right, that the market moves in waves. Okay, and when we say the market moves in waves, it means that what, after every push, there must be a rest phase. You can never see any situation where the market keeps going like this, except there's a news, and it's usually, you know, a very, you know, it's usually a very quick movement. That price will just move for a little bit, you know, eventually it would correct, you understand? But the nature of the market is to move in wave patterns. After every push, there must be a rest phase. After every push, there must be a rest phase. If it's the bearish side, if it's a bearish structure, after every push, there must be a rest phase. After every push, there must be a rest phase. This is the nature of the market. So my job, you know, on the market, for example, on gold, is just what? It's just when the market is pushing, just wait for a rest phase. Okay, because you know that this rest phase will come, and at the rest phase, buy. Wait for the rest phase. At the rest phase, buy. Wait for the rest phase. At the rest phase, buy. You know, you will see that at the end of the day, price has continuously made what? Clear structures. Low, higher low. You know, higher low. Price has continuously made bullish structure. You know, higher high right here, higher high right here, higher high right here, you know, and basically higher right here. So these are clear bullish structures, you understand? So, you know, this is how it is. So we are on the monthly time frame, right? It's clearly bullish. What do? Top-down analysis, I go to the weekly time frame. I read prices again, that, okay, price is still bullish. You understand? Continuously, I'll break them into structures. Go to the daily, it's still bullish again. Break them into their respective structures. Then maybe, you know, come to like the 4 hours time frame, you know, break it again. Then what is my job? My job is to identify where this rest phase will end. That is my job, so that I can be able to buy. Okay, so what do I do? How do I identify a rest phase? Okay, I'll bring out my Fibonacci. Okay, that means I have to understand the concept of structures. All of these things I'm going to teach you. Okay, because prices, you know, remember that what this push is in the direction of trend. This sell is only a retracement. That is, you know, like I said, after every push, there must be a rest phase. The rest phase is a retracement. direction of trend retracement, as we can see on gold, right? If it's a bearish structure, this will be direction of trend retracement. But this is a clear bullish structure. So direction of trend retracement. Now, when prices come for a retracement, what is my job? My job is to find out where is it going to stop? Where is the retracement going to stop? Now, that is where we combine two tools, which is what? The Fibonacci. Okay, that's the Fibonacci tool that I'll bring from the low here. I'm going to teach you how to use all these tools, right? From the low here to the high. I can bring from the lowest point right here to the high. Okay, so you can see prices rejected around the 78.6 zone. So if I was to place my trade, you can see the 78.6, this is my entry. Okay, and beyond the 78.6, it also doubles it by having a resistance point here. So this is what we now call a potential reversal area, that here we can see both a resistance slash 78.6 potential reversal area. So this place is a fantastic place to place your buy entry. Okay, remember that this is 78.6 and this is also a resistance. It's a fantastic place to place your buy entry. You can hide your stop loss at the last higher low point right here, and from here you can ride to as much as this particular point right here for about 1 to 3 risk to reward. There are also ways that you can be able to even make money easier. Like you can be able to make more pips on this particular movement. You can be able to make more money on this particular movement. There are ways to go about it. Okay. So, but basically, this is just the concept of it. Let's see if on the 1 hour. Okay. So basically on the 1 hour also, we could have said, okay, wait for, we found our PRA, right? Wait for a clear change of character. Okay, you can see the last lower high here, price is traded above. Wait for a clear change of character, then bring your Fibonacci, wait for a discount. A discount is just basically after a change of character, the pullback to 61 points is called a discount, and at 61.8 you can buy pinpoint at 61 point. I'm going to teach you all these things. I'm just doing it once over for you, then ride through. You understand? Right now you're being 1 to 1 plus, and you're riding to the high of about 1 to 3.7. So basically, that is just the concept of it. But let's just go back to the whiteboard. Okay, so the concept of it is what? We use top-down analysis. You understand? Trade from the monthly down to the 1 hour to pick our entry. Okay, so now, what are the elements of price? First of all, before I talk about the elements, let me just tell you the characteristics of price action trading. The things that, when I say characteristics, I'm going to talk about some things that I don't want you to ever see on the chart. I'm going to talk about some things that I don't want to ever see on your charts. And I'm also going to talk about some things that, you must know. Okay, so characteristics of price action trading. Okay, so when we talk about characteristics of price action trading, we're just talking about what is even like what are the do's and don'ts, what are the entire the major things when it comes to price action trading. One, you must know that chart structure is king. You must learn chart structure. Without chart structure, you are going nowhere. You must learn chart structure. And when we're talking about chart structures, what are chart structures? You must be able to understand the difference between, structures. For example, this structure, right? This is a bullish structure, while this structure is a bearish structure. Okay, so here like this is what? An higher low. Why is it an higher low? Because it's higher than the previous low. This is also an higher low. Why is this an higher low? Because it's higher than the previous low. This is also an higher low. Why is this an higher low? Because it's higher than the previous low. While this is a low, I can't see any low below it that is higher than. So what about here? This is an high. I can't see any high below it that is higher than. What about here? This is an higher high. It's higher than the previous high. This is an higher high. It's higher than the previous high. Then here, This is also an higher high higher than the previous high. Okay, so what about here? This is a okay. Let's take it from the top. This is an high, while this is a lower high. It's lower than the previous high. While this is a lower high, it's lower than the previous high. This is a low, while this is a lower low, while this is another lower low. This is a lower low because it's lower than this. This is a lower low because it's lower than this. So here on the left side, right, we have what is called a bullish chart structure, and here on the right side we have what is called a bearish chart structure. Okay, so these things, as simple as I drew them out, you have to know them, you have to understand them, and beyond this, you have to understand fractals or structure circles. In the platform I'm going to add you, we are going to see all these recordings there, on chart structures and stuff like that. So the essence is what by the time you study, by the time we're having our general class, you already have a fair knowledge of most of the things I'm going to be talking about. Okay, so on the left side, like you can see, with this chart structure, on the right side, here's chart structure. You need to understand this in details, which I've already done in a recording. I'm going to add you into. But like I said, beyond that recording, we're also going to be learning it live. Okay, during our general class. Okay, so chart structure is key. Very important for you to learn chart structure. Okay, now what is the next thing? The next thing is what? The next thing is no indicators. I don't want to ever see indicators on a price action traders chart. You don't want to listen to anybody that is telling you use moving average, use volumes, use Ichimoku. You don't even want to know what is going on when it comes to indicators. Why? Because indicators are lagging. Okay, the prices would have moved before indicator tell you that, oh yeah, it's time. But meanwhile, price has moved. You understand? So you want to be able to read chart data. That's why I was specific. It is chart data that we are reading. We are not reading indicators. We don't care about indicators. You understand? So this is not something that we're interested in. You understand? So no indicators. Okay, so now what is the third thing? The third thing is what? No news. Okay, so forget about news. You understand? The only thing you should read news for, right, is for your own personal consumption, not for you to read news to pick a trade in the Forex market as a price action trader. No. Only read news for your own consumption. Read news to know what is going on with Trump, what is going on in the United States, but you are not reading news in order to pick a buy or sell in the Forex market. You understand? So it's important to understand that difference. So no news. And lastly, basically, no bots, no AI, no third-party information. Okay, so no bots, no AI, no third-party information. As a price action trader, we don't use any third-party information. We strictly use chart data. What we see on the chart is what I use to predict the market, and it is the most reliable. I don't have to rely on, oh, I'm using this bot. This bot told me to buy, at this level, at this oversold level, or at this over. Sorry, just a moment. This bot told me to buy at this level is oversold. This bot told me to buy at this level is overbought. No. All of those things they give you terrible information. If those things worked, then a lot of traders would have actually made a living from that. But I've not seen any trader tell me they made a living from some of those things. You can, because they give terrible information. So no AI. There are so many, AI tools that people have created right now, that they'll tell you ways to trade for you. Sincerely, all those things, I've not seen anyone that works. You understand? You pay big money for it and it doesn't give you the right information. I tell you to trade for you before you know to blow your account. You understand? So just forget all those things. No third party information. Forget anything that looks like third party. Anything that looks like third party, you understand? You have to concentrate as a price action trader. Okay, so I'm saying these things because there are too much information and there are too much distractions for us as traders. Oh, try this. You are scrolling through your Instagram. You are seeing someone using this bot. You are seeing someone using this AI. You want it as a price action trader. Just forget all those things. You understand? Just focus on reading what historical data and reading recent chart data and using this to predict the future movement of price. That's all you need. Data on the chart. And best believe, right, that these data on the chart are more accurate than any other thing. They are more accurate because they will give you clear view of where the market is going to. The only thing you need to understand is what, how to read these data correctly. How do I read these data? How do I know where price is buying, where price is selling? And that's where chart structure comes in. And that's why I say chart structure is key. Because with chart structure, you will know where market is going to buy, you will know where market is going to sell. You will know where market is making a push, you will know where market is coming for an exhaustion. You know, chart structure basically helps, us in the roundabout of everything. So these are very important. So the last part I'm going to be talking about right now is what are the elements of chart structure. You understand? I have a full course on all these things, like video formats. I'll forward it to you. Elements, or I'm going to add it to the platform again. Elements of price action trading. Okay. So what are the elements of price action trading? Okay. So I'll talk about the elements of price action trading, right? One, we are talking about, like all the tools, everything in its entirety, you understand? So one, we said that what chart structure, very important, is the top element of chart structure. You need to understand the difference between the bullish chart structure and the bearish chart structure. You need to understand structure circles, putting the structures in their respective structure circle. You need to be able to understand that, very important. You understand? Two, you need to be able to understand the Fibonacci tool. Okay, what is the Fibonacci? The Fibonacci is a retracement and an extension tool. You need to know how to use the Fibonacci correctly. You need to understand the levels when it comes to the retracement. You saw me use 61.8, you saw me use 78.6. You need to understand these levels. Okay, when it comes to the extension, you need to understand the 100.0, stuff like that. So that is that for number two. Then number three, you need to understand horizontal support and resistance. Okay, so what are horizontal support and resistance, levels? These are levels on the chart, right? That prices could turn these levels, horizontal support and resistance levels on the chart are sensitive levels on the chart, right? And you need to identify these support and resistance levels. Why? Because from a support level, price can start taking off so that you can buy at that support level. You understand? And from a resistance level, price can start selling down so that you can sell at that resistance level. You understand? So you need to be able to identify these levels. And beyond entry, these levels are also important when it comes to take profit. Okay? Why? Because, for example, you are buying and price at a resistance point. You want to know that, oh, this is a resistance and you want to take profit. So you have to be able to identify these levels out on the chart. Okay? Or you are selling and price is getting to a support level, you have to know that, okay, this support level, that's my take profits. You understand? Because it is a support level. So you have to be able to identify these levels on the chart. Okay. So what is the fourth thing? The fourth thing we're going to be talking about is trend lines. Okay. So what are trend lines? Trend lines are diagonal support and resistance tools. Trend lines allows us to know the strength of a trend. This is a bullish trend, okay, or a bullish structure. If prices keeps respecting the trend line, then the bullish structure is still strong. A violation of this trend line means that that there is weakness in this bullish structure because that's been violated. Okay, it means there's weakness. You understand? It's possible that prices can start selling because of a break of a trend line. So a trend line checkmates the strength of a trend. Okay, if price keeps bouncing off a trend line, then it means that the trend is strong. So a trend line is, it's a checkmate. It checkmates the strength of a trend, allowing us to know if a trend is weak or if a trend is strong. Okay, so the other things I'm going to be talking about right now, the fifth one is what is potential reversal area. Okay, so what are potential reversal areas on the chart? Basically, potential reversal areas are very important because these are levels on the chart, right, that could reverse prices. So it's important that we understand. Like, for example, you saw me on the chart I identified, two levels. I call it a confluence, right? I identified 17.6. I also saw me identify a resistance. Now, that is what makes up a potential reversal area. Basically, a combination of two things, okay? Not just like right here, you can see that what? You can see that there is a resistance point right here, and beyond the resistance, within this structure circle, okay, this is the correct Fibonacci of this structure circle. You wouldn't know about that now, about structure circle, except you've seen my teachings on that. So now within this entire zone, right, this is a reversal zone. And you can see that prices reversed right there. Why? Because of what? This is a PRA. PRA is just a for potential reversal area. This is a PRA, which is what? A combination of two things, which is what? Resistance and 78.6. Prices is bound to go up. Obviously, there are times that price could fail, and that's why risk management is important, you understand? But these levels are bound to reverse prices, you understand? Like I said, there are times it could fail, no big deal. That's why we preach risk management. If there was no time that it could fail, I would say, oh yeah, load all your accounts on one trade. But instead, I will tell you that what? Risk 5% per trade. You understand? If you have a life account, risk 5%. You understand? If you have a prop account, risk 0.5%. Don't even risk 1%, risk 0.5% if you have a prop account. You understand? So potential reversal area are basically levels on the chart, right? That prices gets to and may not be able to go beyond. And these levels are levels that are what? Combination of two elements. It has to be a combination of two elements, either a trend line and Fibonacci, or horizontal support and resistance and Fibonacci. Here, just as we can see, we use the combination of what? Of horizontal resistance. This is a resistance. It is horizontal. This is a horizontal resistance slash 78.6 as a zone. Okay, you can see the 78.6 written right here on the Fibonacci. You understand? So use a combination of 78.6 and resistance, and you can see prices swinging back up. You understand? So this is just the concept.